If you want awesome products at great prices, check out the in the description. The global financial landscape experienced a dramatic roller coaster on Monday, fueled by President Donald Trump's scathing criticism of Federal Reserve Chairman Jerome Powell, followed by a surprising market rebound. The initial sell-off, triggered by Trump's blistering attack labeling Powell Mr. Too Late and a major loser, sent shockwaves through the markets. The dollar weakened, U.S. Treasuries faltered, and Wall Street braced for the worst. The president's relentless pressure on the Federal Reserve, questioning its independence and demanding lower interest rates, created a climate of uncertainty that rattled investor confidence. This unprecedented attack on an independent central bank raised serious concerns about the potential for political interference in monetary policy, a cornerstone of a stable and predictable economic environment. This volatile situation unfolded against a backdrop of already simmering global economic anxieties. The International Monetary Fund, IMF, issued a stark warning, declaring that Trump's tariffs had unleashed a major negative shock on the world economy. The IMF slashed its growth forecasts for the US, the UK, and the global economy as a whole, reflecting the escalating trade war's detrimental impact on international commerce and investor sentiment. The downward revisions underscore the far-reaching consequences of protectionist policies, highlighting the interconnectedness of the global financial system and the significant ripple effects of trade disputes. However, the narrative took an unexpected turn. Amidst the turmoil, a glimmer of hope emerged. Reports that U.S. Treasury Secretary Stephen M. Mnuchin, it seems there's a typo in your source mentioning Scott Bessent, anticipated a de-escalation in trade tensions with China, injected a much-needed dose of optimism into the markets. This news, coupled with the inherent resilience of the U.S. economy and the underlying strength of many corporations, proved to be a powerful catalyst for a remarkable turnaround. The market's response was swift and decisive. The Dow Jones Industrial Average, a key barometer of U.S. economic health, soared over 2.5%, mirroring gains in the broader S&P 500 and the tech-heavy Nasdaq. This dramatic rebound signaled a vote of confidence in the underlying strength of the U.S. economy, and perhaps more importantly, a rejection of the president's attempts to influence monetary policy through public criticism. The gold market also reacted significantly, with the precious metal surpassing $3,500 an ounce for the first time, reflecting a flight to safety amid the geopolitical uncertainty and economic headwinds. The dollar, initially weakened by Trump's attack on Powell, also staged a recovery, regaining some lost ground as investor confidence returned. This recovery, though significant, underscores the fragility of the current global economic climate and the persistent risks associated with the ongoing trade war and the potential for further political interference in the financial markets. Russ Mould, investment director at A.J. Bell, aptly summarized the situation. Persistent comments from President Donald Trump, which put the independence of the U.S. Federal Reserve in question, resulted in weakness in the dollar, U.S. Treasuries, and Wall Street overnight. His assessment highlighted the gravity of Trump's actions and their immediate impact on market sentiment. The events of Monday served as a stark reminder of the significant influence a president's words can have on the global economy, and the crucial importance of maintaining the independence of central banks in navigating complex economic challenges. The day's events unfolded as a potent illustration of market volatility, the unpredictable nature of investor sentiment, and the profound impact of political actions on global financial stability. The recovery, while encouraging, did not erase the underlying concerns regarding the ongoing trade tensions and the unpredictable nature of the current geopolitical landscape. The market's resilience, however, offers a measure of hope amidst the ongoing uncertainties.